Hello, Kurt Jackson, Retirement Income Strategist with KJ Financial here with this week's Your Money Matters. We're going to continue with our theme that we started last week. A lady by the name of Kim Butler. She was a typical financial planner, and basically what this is kind of some excerpts from her confessions of a former typical financial planner. This week's Your Money Matters, we're going to talk about the truth about typical planning, financial planning advice. And she basically goes on to say that she had entered the field of financial planning, with gusto and optimism and being a true believer, thinking she was going to be able to help people. But what she found was that financial planning sounded like a really good idea, and it was certainly better than doing nothing. But she says as she learned, it was all based on best guesses, assumptions, unfounded optimism, and mathematical half-truths, which is what I've discovered too as I've done the research on this. I just wasn't a traditional financial planner ever, so I'm taking it from that we're using that as our way of looking at it. People are led to believe they can expect to earn certain returns in the stock market. Some financial gurus even assure people they'll earn an average of 12% over time in the stock market, and that's a number that's not based on any historical fact. In fact, clients are told about the wonders of compounding interest, but they're most likely not told about how the fees compound over time and how average rates of return don't equal actual rates of return. The fact that target date funds, which are all the rage now, don't protect people from the risk that's is assumed, and why speed trading has made today's market more volatile than the stock market that our parents were involved in. Furthermore, investors are encouraged to defer taxes without seriously considering the potential impacts of the deferrals that they'll have when they actually spend their money. Or worse, investors are actually assured that your tax rate's going to be lower when you retire, when the opposite's probably going to be true. Who thinks tax rates are going down, or that they're going to be somehow easier to pay when you stop working? Then there's the math. It's a cruel lie to let most people believe that they can work for 40 years, save a small percentage of their income, then quit work and retire for decades, taking an income that's going to have a high inflation amount that you have to keep raising every year to be able to maintain your lifestyle. Yet this this is the cultural expectation and what we think is supposed to happen. Behind the scenes, to those that are paying attention, you begin to realize that the real numbers rarely add up to the projections. And this is something that I've discovered, and I've tried to get out there and tell people too. See, for most people, the numbers just flat out don't work. We don't save enough. Many people only save 2% of their income, thinking that they can make it up somehow with miraculous rates of returns in the stock market, but they can't. They find their investments don't earn enough, that markets rise and fall. Inflation is underestimated, as is the enormous toll that taxes and those tiny little fees are going to have. In fact, for many investors, that could cut your ability to build wealth up to half or more. Okay, what happens when those numbers that they're promising don't work? What do planners say to a client who just doesn't earn enough or can't save enough to ever reach their retirement? Okay? Those desires. The truth is a dirty little secret. See, in many financial planning environments, planners are taught how to tweak the numbers to make financial plans work or look like they're going to work. Typical planners and brokers might use average rates of returns of the stock market because the actual rates of returns, which are lower than the averages, don't look as impressive. The time frames that they use to calculate past market averages are carefully selected to show the stock market in the best light possible. Illustrations are run that don't account for all the fees or taxes or realistic rates of inflation or investor behavior or the client's true potential longevity. As the expression goes, the devil's in the details. And this is certainly true with typical planning, financial planning and advice. The fancy graphs and charts giveth, and the fine print taketh away. It's time for us to tell the truth about financial planning, retirement, and that thinking that the markets are going to save us. The truth is that the suppositions of financial planning are based in a combination of guesswork, mathematical projections, and wishful thinking. The truth is that even when people believe they're on track, they're generally undersaving. The truth is that even millionaires who have followed typical financial advice are now afraid to spend their principal for fear that they'll outlive their savings. The truth is that most people have only enough in savings to live the lifestyle that they have grown accustomed to for a decade or so at most before they become dependent on the government or the family. The truth is that most typical planners and brokers cross their fingers and pray that the stock market doesn't crash because they don't know what else to do. The problems go even deeper than unrealistic unrealistic expectations and optimistic math. Right? The truth is also that financial planners and financial advisors are financially rewarded when they convince clients to keep their money at risk in the market. It's just how the system works. See, advisors are typically paid for assets under management, and those assets are typically at risk in the stock market. Think about it. If they had a safe money place to put it, there's no reason to continue to pay them year after year after year like you do when you have your assets under management. Okay, so we talked about the truths, or the things that aren't true. How about the half-truths and untruths? Okay, conventional wisdom says to get a good job, max out your 401k, but that's really rarely how wealth is built. The focus that traditional financial planning is it's all on accumulation, but we don't live on accumulation. We live on cash flow. See, we're told to pay cash for our cars and then prepay our mortgages early instead of putting that extra cash to work for us in building to build cash flowing assets. Financial gurus preach buy term and invest the difference, even though many rich and successful people throughout history have done and still do the opposite of that. Okay? Retirement is assumed instead of the possibility that people might be passionately productive at any age. Okay? People are programmed to believe that somehow they're going to spend less in retirement, in spite of inflation, in spite of lifestyle desires. You know, one of my favorite sayings is, every day is Saturday in retirement and we're supposed to spend less? See, financial projections assume that retirees will be in a lower tax bracket, in spite that logic says otherwise. This myth and the one above it persist because they are necessary to make financial plans work, at least on paper. Okay? Then there's plan B, you know, when unexpected life events derail even the best of plans. See, when the job or the stock market or the marriage or the rental house don't go according to plans, people need money. And when people need money, they typically raid their 401k or their 403b, 457 plan, or their IRA, which they incur penalties, income taxes at the most inopportune time, and they may even have to pay some back-end sales fees as they exit the market. And retirement accounts make poor, inefficient emergency funds. Right? Ironically, the best-laid financial plans sometimes make people less prepared to weather a financial storm. According to Bloomberg.com, nearly 10% of Americans with retirement accounts are finding it necessary to cash part or all of their accounts early. In fact, in 2011, that $57 billion flowed out of 401ks and IRAs because they were cashing out early. The fact is, planning of any kind can really be a joke, because when does everything go as planned? You've got to have contingency plans built in, and traditional financial planning doesn't do that. Okay, what's the saying? Man makes his plans and God laughs. Yes, that's pretty true. So what this lady's saying is that through her years in traditional financial planning, she found out that traditional financial planning just didn't work. That's what we found. That's what I found. That's what my clients were finding when I was doing mortgages. You know, they like to say, well, it might be better than nothing. Well, you know, I could argue that a sense of false security, thinking everything's fine, is worse than insecurity, because if it's insecurity, you're at least maybe trying to do something to make it, to shore that up, to save more money. But the fact is that this is a broken system. And to keep following the same advice and doing the same things over and over and expecting a different outcome is simply insane. Okay? So we're going to continue with this theme in next week's. Just got a lot of great information, and if you follow any of the stuff that I've talked about over the last several years, you'll see that we're really on the same page, and she must be, well, she's experienced and seen the same things that I've experienced and that I've seen. She's just seen it from the traditional, typical financial planning thing, so she's more of an insider than I am. I'm just going off of the information that I've read. So just think about those things, folks. What we're trying to do here isn't necessarily to make everybody do business with me, although I'd love to help as many people as I can. My ultimate goal is to get this information out so you can look into it and make the decisions that you need to make, because I don't want you to show up at retirement, have everything kind of fail on you, and you're like, man, I didn't know. Why didn't I know? Nobody told me this. Well, if you follow me, any of the stuff that I put out there, you're not going to be able to say that, because you know. You've learned about this. You knew there was problems, or at least suspected it, because I'm at least the minimum of what I'm doing, hopefully, is at least raising some suspicion for it. Now, when you go out and research this and you go out to the media, you're going to find that the media is really contradicting what I'm saying. But if you'll take some time and learn the facts, and when you start to read those media articles that are contradicting what I say, and you start seeing the things that they use, you'll find out that their facts are not facts. Okay, it's more of the same drivel, I'll call it, because they're just going on these assumptions, and so that's just how it's always been. Well, that doesn't mean that's how it's always working. One of the most interesting things that I always say is 401k has been around since late 70s, early 80s, so we're 30, 35 years. Some of the and I just bear with me on the numbers. I'm not going to say they're exact, okay, because I can't remember my source on this, and that I'm getting better at trying to remember target or put my sources in here. But current retirees, this is probably 3 or 4 years ago I saw this. Current retirees, only 14% had more than 250 grand in their 401k, and they're actually in investable assets in retirement. Only 8% had more than 500 grand. Folks, that's not enough to cut it. And that's what you think, hey, 500 grand sounds like a lot of money, and it does, except for when you're trying to pull a big income off of it for 15, 20, 25, 30 years. Average retirements lasted 21 years. The new mortality tables came out, and a 65-year-old male today has a 50% chance to live past age 86.6. 65-year-old female has a 50% chance to live past 88.8. Folks, that's a long time in retirement. Okay, so we need to make sure that our money lasts our entire life. Thanks for tuning in. If you found value in this, please share the link with your friends, your family, anyone you care about. Make sure you tune in next week. If you want to know more about this type of information we're talking about, you can always check us out on maxmyretirementincome.com. We've got a bunch of information there. You can go back to Your Money Matters and see all of our old videos there. If you go to my YouTube channel, which is Retirement Bliss TV, we've got, I think we're almost up to 110 videos there. So there's a bunch of great information there it's all designed to help raise awareness and benefit you. So thanks for tuning in. Please share the link and let folks know that we're trying to get this message out so they're not stuck in retirement with what they thought, nowhere near what they thought it was going to be. Because unfortunately, that's what's happening with a majority of retirement. So thanks for tuning in, and we hope to see you next week.